As we just mentioned, everybody's coming out. The quiet period is over. You're at the highest end of this. Explain yourself.
I mean, Andrew, I think a lot of the focus is on the near term. Obviously, there's been a deceleration of revenue as they've kind of penetrated into this, what I would call like the taxi market. So when we've approached both Uber and Lyft, it's really more about what autonomy can do for them over the next 10 years. And this is a technology that can really...
But when do you think autonomy is real?
I think it starts to impact their numbers 5 years from now. So you have to go out 10 years at least to see where the inflection point is. This is something that could reaccelerate revenue because it brings the price down to the consumer and obviously brings the cost down to them. So it can reaccelerate the revenue. The problem is, I'm sure as you realize, is it's not happening next quarter or even next year. But there will be, what they would call geofenced or specific routes where autonomy will start, and that will require the platforms of companies like Uber and Lyft in order to do that. So to look at this stock based on a 2020 revenue multiple where revenue is decelerating, right, I just think it's the wrong way to look at it. You either believe in autonomy or not. And frankly, look, the companies downplay autonomy because it's not impacting their numbers in the near term. But Uber's spending $700 million a year on their own autonomy group. They've got 1,100 people in that group. And they're not the only one investing.
Well, Walter, right, but they're not the only one investing. So in your report this morning, you say the biggest risk to Uber and Lyft might also be their greatest opportunity. That is the autonomous piece. But the risk is that somebody's going to get there first.
100% true. I mean, if Elon delivers on his 1 million Uber taxis next year, that's going to be a problem, especially how he describes them and their ability to drive everywhere. I mean, Lyft only has 1 million drivers or 1.1 million drivers in the U.S. and Canada.
If you're long Uber right now, are you short Tesla?
I mean, I think there's probably more to Tesla than just his autonomous strategy, right? I mean, there's people buying electric cars. We don't cover Tesla, but there's more to that company than that. However, on that point, on his autonomous point, if you believe that Elon is going to deliver on 1 million Uber taxis, that's going to be a problem for Uber and Lyft.
But I'm asking you straight up, do you believe it or you don't believe it?
No, we don't believe it at all. I think the way autonomy is going to evolve is in specific locations. Let's take in New York. I mean, if the autonomous car is there and can take you up 3rd Avenue, because it works and there's one close to you, great. There's a small situation where they can help save you some money and obviously create better margins for the company. But if you want to go to a different location out to New Jersey or up into Westchester, you're going to need a driver for several years because the ride is going to be more complex. So is the user going to switch back and forth between someone that can give them one specific ride versus all the rides, or are they going to stay within the app that Uber and Lyft can deliver to the end user?
Hey, Walter, final question. Maybe just help us with this. So many big banks are coming out today with buy ratings. So many of them were involved with the IPO, at least originally. Some people would say that they know the company better than everybody else, and therefore you should take what they say very seriously. Others should say they're as conflicted can be, and you should take it with a grain of salt. Which side are you on?
I think investors should take in everything that they can. Obviously, there's conflicts that exist in everything, and investors should take in all of the inputs that they can in order to make their decision.